come to financial stability. The system-level financial parameters relating to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain very healthy. The CRAR is more than 17%, NIM at 3.5%, the liquidity at 132%, the GNPA at about 2.2%, NNPA at about 0.5 to 0.6%. The credit deposit ratio for the banking system is at 78.9%, broadly similar to that a year ago. Similarly, the system-level parameters of NBFCs too are sound with adequate capital position and improved gross NPA ratios. Bank credit grew at 12.1% last year in 2024-25. And I want to highlight over here that while it was slower than the growth rate of 16.3% in 23-24, it is higher than the average growth rate of 10.3% recorded in the 10-year period preceding 24-25. Moreover, it is important to look at all sources of funding to the non-financial sector and not only bank credit. And so we find that in 24-25, while the bank credit, non-food bank credit, in fact, reduced by about 3.4 lakh crore rupees from 21.4 lakh crore to almost 18 lakh crore, the flow from non-bank sources more than made up for this decrease. Thus, even though growth rate of bank credit slowed last year, the overall flow of financial resources to the economy increased from 33.9 lakh crore rupees in 23-24 to 34.8 lakh crore rupees last year. That is an increase of almost a lakh crore of rupees. And we find that this trend continues even during the current financial year. As transmission to money markets has been faster, large corporates increasingly have relied on market-based instruments such as commercial paper and corporate bonds to source funds, reducing their exclusive reliance on bank credit. Similarly, profitability of large corporates has increased. Their internal resources, therefore, have become an important source for business expansion. Before I conclude, let me underline that for us at RBI, the interest and welfare of citizens of India is foremost. It is the people of India, including those at the very bottom of the pyramid, who are our raison d'etre, the reason of our being. In this regard, therefore, I have three consumer-centric announcements to make. One, as Jan Dhan scheme launched about 10 years ago, completes now the decade. A large number of accounts have therefore become due for re-KYC. The banks are therefore organizing camps at Panchayat level from 1st of July to 30th of September in an endeavor to provide services at consumer doorsteps. Apart from opening new bank accounts and re-KYC, the camps will also focus on microinsurance and pension schemes for financial inclusion and customer grievance redress. Two, we will be standardizing the procedure for settlement of claims in respect of bank accounts and articles kept in safe custody, or in other words, safe deposit lockers of deceased bank customers. This is expected to make settlement of such claims more convenient and simpler. Three, we are expanding the functionality in RBI Retail Direct platform to enable retail investors to invest in treasury bills